There is no lack of venture capital in Europe. That's right. We all know Europe is being left in the dust by the US and actually also China when it comes to big unicorn startups. So, of course, many voices in Europe have pointed out that maybe there's a lack of venture capital funding. Maybe that's the reason. Therefore, European states have to step up and to help European startups to become giant billion-dollar companies, these unicorns, that can actually compete with the US and the Chinese counterparts. No, that's not true. It's not funding. It is something else. But what is it? Today, I'm joined by Jasper van Dijk, research lead at the Dutch think tank, the Institute for Public Economics. So, Jasper, welcome.
Hi.
Before getting into why it's not a lack of VC funding or what's actually going on, I have 3 graphs, 3 points of data that you can maybe walk us through first.
Yeah, so the first graph is quite a famous one. It's the first graph of the Draghi report. So I think a lot of presentations, a lot of talks start with this graph, and it basically compares the labor productivity in the EU with the US. And we see, well, starting in the 2000s, in the early 2000s, that Europe is stagnating. The US is getting ahead, and basically our labor productivity is falling. And this, of course, has as consequences throughout the economy. For example, wages are higher in the US than in the EU. And the question is, what's going on there, basically?
Yeah, so interestingly, I think this is a very long-term graph. So we start in 1890, and Europe has always been less productive than the US per hour work, that is. But then we had this massive catch-up period after the Second World War, and we actually almost caught up in the year 2000. And then we see this drop again, right around the time of the internet boom and around the time of all the famous US big companies that we don't have here in Europe: Google, Microsoft, Amazon, Nvidia, OpenAI, you name them.
Exactly. And that's the core issue.
Yeah. So why? What's going on here? And then you send me this second graph that is able to visualize. I think it's quite striking. What's going on here? So we have public from scratch US and EU companies less than 50-year-old with a 10 billion market cap. So what are we seeing here, Jasper?
Yeah, so we see these huge companies in the US that are less than 50 years old. So maybe if you go a step back, if you look at the economy in the EU and the US around 1999 or 2000, you see the largest companies in the EU are Volkswagen, Mercedes, and in the US it's General Motors. So it's really similar companies. But now we see in the EU the same companies. Volkswagen, Mercedes, these kinds of companies are still the biggest one. Of course, you have ASML, but still these car companies are really big in Europe. But in the US, it's changed dramatically. We have these huge Google technology companies. We have Google, Amazon, Microsoft, Meta. Those are now the huge companies, and basically they won the IT revolution. And basically, this is an important piece of the puzzle why the US is thriving in all these statistics compared to the EU.
Yeah. And so I'm just going to read some of these, and the green bubbles are high tech. And we all know this. So, okay, the biggest one right now is Nvidia. And even, and then on the right side, we're seeing the EU with some bubbles, and they're too small to read even for me on the big screen. And
I think
what's
Spotify
striking,
is there.
okay, yeah. ASML probably, right? Like you mentioned. But even the bubble for Nvidia, which is at the bottom of the graph for the US, is bigger than all the young companies in the EU combined.
Yeah.
Which is just insane, right? Like, okay, and then we have Microsoft, Amazon, Apple, Meta, Google. But strikingly, also we have a lot of blue companies there. So they're not high tech companies. We have Tesla, United Health, Home Depot, Costco.
Yeah,
Uber, Apollo, BlackRock, Blackstone, some financial big companies there. So it really suggests that the US is dominating the EU when it comes to scale ups, right? That's very clear. Yeah. Okay.
And and what we saw in this graph, these companies are relatively young. well, they all started as a startup, right? So we really want to look, okay, what kind of new companies are being founded? And then the next question is, okay, if you have a new startup with a good idea, are you able to scale? Are you able to grow? And this is also one of important piece of the puzzle that we see, that in the US you see that the successful kind of startups are really able to scale, to grow, and to grow into these huge companies. But in the EU, they stay small, basically.
Yeah. So some examples, maybe also with European founders, right? I think you have Stripe, very famously, Irish founders. That's a big payment company in the US. And so I think you also see then that many companies move to European startups that were successful, either move to the US or are bought by big US companies, right? I think in the UK, famously, you had this AI startup. I know I forgot the name. But it's now Google AI. Essentially, it's been absorbed by Google, and in the US, companies
this is
can
winner
scale.
takes all dynamics, you could say. If you are already the largest and you have this large capital, you can just buy up your competitors and grow even larger.
Yeah, but okay, that's not fully happening in the US. You still have all of those massive new companies in the US as well, Netflix, Dell, Salesforce, that are not being bought up. So, okay, I think it's pretty clear that Europe has fallen behind. And then the hypothesis that many have spoken about, even I was at a conference last week where there was the ex-CEO of ASML, Peter Wenning, and he wrote this Wenning report, very well known in the Netherlands right now. And I think one of the main points he made was there is a lack of funding for scale-ups in the Netherlands and in Europe in general. But you are saying, no, that's probably not the real problem. So
I'm a skeptic. It's really hard to get evidence on this. So it's an ongoing debate. But if you look at the problem, you see that, okay, the amount of venture capital investments in the EU is a third of the venture capital investments in the US. And so maybe one step back is, okay, why is it so important to look at this venture capital? Because it's a sort of capital that's really important for startups and scale-ups. It's a form of equity finance. And the idea is it's really risky. You don't know if the startup is going to succeed, but you invest in a lot of startups and you hope one of them is the new Facebook, basically. And then you get bigger profit.
Yeah.
So
you can lose money on 90% of your investments, whatever. Exactly. They're all failing, but because you bought Facebook when it was young, you still make money.
Yes, exactly. So this is a special kind of capital, and the banks are not doing this. For obvious reasons, it's really risky. So the analysis that we have to look at venture capital is makes a lot of sense, because it's a really important factor for these companies to grow. And then the next argument you really hear is that, okay, so we have to look at this venture capital, and we see it's only 1/3 of the levels in the US. So they have 3 times as much venture capital in the US. But then, of course, you have to dissect that and see, okay, but why is it 3 times higher? That could be a supply problem or demand problem. And I don't really hear this argument a lot. Is it because there is more venture capital available, or is it because there are more opportunities to invest your venture capital in? And I would argue there are a lot of high promising startups in the US, more than in the EU. And that's why we see way more venture capital investments in the US.
Mm-hmm.
So it's not, so if you look at this problem, it's not really a lack of supply. It's more like a lack of opportunity, you would say. So this is more a theoretical way of looking at it. Is it the demand, or is it just the supply of capital? And so if you look at the Netherlands, so I'm based in the Netherlands and I wrote most of my articles in Dutch. You see, we have a really international venture capital market. A lot of US venture capital is flowing into the Netherlands. And we see this venture capital market also here domestically really is grown a lot over the years. Also, when the startups grow in the Netherlands, you see venture capital growing. So for me, it's really, it's hard for me to believe that there is a supply problem here. because we see venture capital growing when the startups are growing, and we also see a lot of US and international capital flowing into the Netherlands. So basically, capital is really mobile, and if you have a great startup with a great idea, you can get the funding, basically. So that's
Yeah. So, okay. It's like any other market then. It's like the same as Netflix is available in the Netherlands. The big venture capital firms, yes, they're bigger in the US, but they also invest in the Netherlands. And the Netherlands is probably a good example for the EU because it's one of the richer parts of the EU, one of the more densely populated parts. So it's different than Romania, for example, right? I
Yeah.
think you wrote about that as well, where there may be actually a lack of venture funding.
Yeah, exactly. So I think it's way harder for these international companies, of course, to invest in companies where they don't have a really financial infrastructure. So I could see that you can make the argument, okay, maybe in the EU there is a venture capital problem, but I don't think it's in the Netherlands or in Sweden, but it might be in the more Eastern European countries, for example.
Yeah. Okay. But do you also have some evidence to back this up? In the sense that I can see your theoretical point, absolutely.
Yeah.
Is it supply or demand problem? If there are not enough opportunities for scale-ups in Europe, then of course venture capital is not interested in coming here more, if whether it's homegrown or foreign.
Exactly.
But
Oh, yes,
if someone
yes.
like Peter Wenning, who is the ex-CEO of ASML, makes the opposite argument, then I'm inclined maybe to believe him a little bit more than you. To
Yeah,
put
no,
it
I
provocatively.
I can understand.
So,
A lot
what
of
do you have
people in
some
the Netherlands
evidence?
have this. Okay, and then you can also look at what are the arguments of the opposing party, right? And
Yeah.
basically, the only arguments they present is that startups are not really growing in the Netherlands.
Yeah.
That could be so many factors why startups are not really growing in the Netherlands. And they say it's because they can't attract the funding. Yeah. But anyways, and so evidence I could use to make the other argument is that you see, and I also have this in a graph, you see that the internal return on capital in the EU for venture capital firms is higher than in the US. So
Yeah.
basically, capital is more profitable.
Yeah. I can see it
Sorry,
here.
in the US and it's compared to the EU. So if you would argue there is a supply problem of capital, then the profits on capital should be higher in the EU than compared to the US.
Okay.
And
Yeah.
you're not seeing that.
Mm.
So this is one graph that's kind of is from Coase and Coatlam that you could argue that okay, probably it not the supply of capital.
Yeah, that's interesting. I think they're a bit volatile. Huh? Like the dark blue line is Europe venture capital. The light blue line is the US. Up to 2009, they're fairly similar, but after that, it's very clear that US venture capital has a larger rate of return, about 15% profit based on their investments. And then in the Europe, it's more like 10%. And it's very strange indeed. Like if the talent is all in Europe and all the opportunities are here, everything is there, then and we're really lacking venture capital, then the venture that gets through should make massive profits.
Yeah.
That's your argument, right?
Exactly. So we don't see it's
Mm.
if Europe would have a supply a capital a supply issue, there should be higher internal rate of returns because there's just like for example, if you have if you compare it to any other market, if you have a more there is not a lot of competition, profits are just higher.
Mhm.
And it's the same argument here. So looking at this evidence, you would say, okay, probably is not really an issue with supply, but we can also look at it from a different perspective. For example, what you see, and this is interesting because then we're going to talk about policy, is that in the Netherlands, if you believe there is a lack of venture capital, the argument is, okay, the government should intervene, right? And you see that in a
Yeah.
lot of countries, especially France. You see that, okay, the government's thinking, okay, there's a lack of venture capital. It's really important. Our startups cannot grow. We should supply our own venture capital, government VC. And so in the Netherlands, you see this ongoing policy debate that, okay, we should have like a semi-public private investment bank that supplies capital. And you see this also in other countries. But for example, Sweden is one of the exceptions in Europe. They are doing really great.
Jasper, what we're seeing here then is the amount of unicorns per country in Europe, and it looks as if the UK and Germany are doing really well, but these are absolute numbers. So there's 181 unicorns in the UK. There's 75 unicorns in Germany. There's 51 in France, which has 70 million people. But then what's really striking is actually Sweden. So Sweden has just about 10 million people, and it has 48 unicorns.
Yeah.
So something is going on in Sweden. Have they figured out VC funding?
Yeah, so maybe if you follow the arguments, maybe you would say, okay, Sweden is the best in VC funding. they solved it. But if you look at the next graph, they basically, so this is showing how much the government is intervening in the venture capital market. Basically, these researchers calculated, okay, how much of the venture capital that is circulating your economy is private or public. So you see on the left-hand side, you see the absolute numbers of government VC, and on the right-hand side, you see the proportion of all the VCs going on what's public and what's private, and then you see it's basically around 40%.
Yeah. So Germany has roughly 40% government funding, VC funding. That's very high.
That's very high.
Sweden,
and the lowest, so more like between 10 and 20%.
Yeah.
So it's so they're not doing way more on the venture capital market than the other countries.
Yeah. That's not the explanation for Sweden's miracle.
I don't think that's the explanation for Sweden's miracle. Yeah. So something else is going on.
Yeah. So you've presented two pieces of evidence. VC funding, if it comes to Europe, doesn't make that much more money. And then in Sweden, where they do have all the unicorns, they don't have that much VC funding, and certainly not from the government. Those are the main pieces of evidence?
So it definitely is an ongoing debate. But for me, looking at the evidence and looking at the arguments, I think we're just wasting our time a bit to focus so much on this venture capital market, and we should really prioritize looking at other factors. And I think our impact with policy can be way bigger if we focus on those factors than focusing on this venture capital market.
And what are the other factors then that are keeping back European unicorns?
So there are a lot of arguments going around. I think the important one is always to mention is the fragmentation of the internal market. So we have one internal market, but still we have all these different kinds of regulations in countries. So it's really hard for some companies to scale, because you can grow in the Netherlands, but if you also want to grow in Germany, you have all these different regulations, and that's just basically a cost or an extra tax, you could call it, to grow. Affected by these fragmentations, right? It's we're using the language models in the US, the large language model in the US. It's really hard to export. They don't really get affected as much by different kinds of regulations. We're just going to a website and use it, basically. So I think this is an important argument. This is more for just physical products, right? But it's not really an important argument for these deep tech kind of products or software. So I think the internal market is important, but not a piece of the puzzle for these technology companies. I think one really important factor is talent. So I think things are changing, but we saw that a lot of really talented European, especially in the tech scene, migrated to the US. And it also makes sense. If you really have a lot of, if you are at the top in your field and you think, okay, I want to found my own company, or I want to learn more technical skills, where do I have to go? Well, basically to Silicon Valley, right? This is a great magnet for all this talent. And so it's a self-reinforcing feedback loop, of course. So all the talent is going there. The great companies are getting founded there. More talent is going there. So it's really hard to stop this reinforcing mechanism. But we, of course, see now with Trump, I think maybe a lot of young people make other decisions, and maybe some talent from the US actually wants to go to Europe. But I think an important thing is talent, and of course, policy can actually also do something about this. For example, universities we have good universities, but the top universities are, well, there's some in the UK but in the US, but still, if you look at the university landscape in Europe, I would say that we can actually improve that. So I think one important piece of puzzle is talent. So get the most talented people here in Europe working on these problems, startups making sure startups can actually attract these kind of people. And then in another, I think, important factor is what is called cost of failure. And this is, you have to pay a lot of severance costs, maybe some training. So if you want to, especially if you think, okay, this is not the right fit, or I hired these people to work on this new kind of technology, but it turned out that it was not a good idea, it's really expensive for you. So risk taking in this sense is quite expensive. In the US, you also have these examples like Microsoft of Meta just hiring thousands of new people, and then they're thinking, okay, no, sure, we have to go to another direction, and they're just firing all these people and just moving ahead. So it's for them quite relatively cheap to experiment. Of course, we have the social model in the EU, right? So we also just get proud that we should also cherish that you can get fired in a minute, and then you don't have a social safety net. But
yeah, okay, but Denmark is not necessarily the country with the unicorns.
No, so but if you look at this the last graph, then so we can, of course, unicorns is one metric, but we can also unicorns are just quite relatively low numbers. Like you saw that in Sweden it's 48, in France it's 51. But you can also look at for example other smaller companies, not as large as these unicorns. And what we see here, this is from a relatively new paper from Coast to Coastland, not my work, is that on the horizontal axis, you see basically the cost of failure. So we see in Spain that if you have to fire people, then you basically have to pay them like 62 months worth of salary. Wow. That's a high cost.
Yeah.
And we see Italy, France, they also have these high costs. And if we more look on the left-hand side, we also see Sweden again. The USA, of course, but also Denmark.
Yeah, and Switzerland.
And Switzerland. And so what these researchers did, okay, let's look at another proxy of innovation. We're not looking at scale ups, but we're basically looking, okay, how much percentage, how much our business investing in research and development, and then especially in this biotech scene. And then basically see there's a relationship in these countries between how much they invest in these kind of technologies and how big the cost of failure is. So of course, I'm not saying this is the best evidence. Of course, there's a lot of factors going on behind this, but it's quite an interesting way to look at this problem. That's okay. There could be a relationship how innovative a country is, and how big its cost of failure is.
And this is not just about scale ups. This is just about R&D. So that can also come from big companies, right?
Exactly.
I could imagine that this is indeed another big piece of the puzzle, because if you look at, for example, the latest AI boom, yes, you have some real startups that that are VC funded, I think, a lot of them, like Anthropic, OpenAI to a large extent. But there's also a lot of innovation from big established US tech firms, right? So there's, Grok comes from X. And then we have Google, who's really leading in the AI race right now. And there, I could imagine it becomes much more important whether or not you can fire people. Because to me, but you can tell me I'm wrong, of course. It seems like, well, if you're a small startup and you fail, you just go out of business, right? So it doesn't really matter if you can't fire people, because the VCs will just write off you as just another failure in their portfolio. That was not Facebook. That will earn them all the money. So to me, that doesn't seem so clear that for startups it's that important. But for big companies, it makes a lot of sense. And I think I also read a blog somewhere making the case why, for example, Volkswagen is finding it very difficult to keep up with the likes of Tesla.
Yeah, I think you're right. I think it's a bigger the arguments. It's a bigger factor for larger companies, of course. But I think also if you're a startup or a scale up and maybe you have 50 employees or 60, you also slowly run into this problem. That it's quite, then you have to make these decisions, okay, are we going to grow by 20 people or not, right? And then you also have to think about, okay, if we are going to hire 20 more people, what if we make the wrong decision? What if we actually don't need these 20 people? So I think you're right. So of course, it's a bigger issue for these larger companies that also have these labor unions behind them, of course. So there's a lot of other factors going on, but I think it's also for some startups also will can run into this problem quite quickly.
Yeah. Okay, so then we have talked about reasons that might actually cause this. It's potentially not VC funding.
Yeah.
The labor rigidity might, or at least this graph that we're looking at right now, does show a very clear correlation between research spending and labor rigidity. And we can see that some European small countries that have less of that rigidity are doing better, are investing more in risky spending. And to me, it does make sense. And you're saying, look, this doesn't have to come at the cost of our social model where you can't afford to go to the hospital anymore if you lose your job, as maybe the case in the US, because if you have a social safety net that's a bit more decent, you can do it like that, like Denmark and Switzerland and Sweden are doing. But for the internal market, we went through that relatively quickly. I think that's a big argument that Draghi also makes, right? Which is, look, as a scale up, you cannot really scale as quickly to all of these markets.
So I think it's in a really important piece of the puzzle, and it's really important if we look at this productivity. For example, you also we started this presentation looking at these bubbles, and there was also, for example, Home Depot. Home Depot is a huge country in the US because they can just really easily serve the whole US market. It's really easy to scale, and that's why they're so big. And so we have, and in Europe, we have all these different, national, in the Praxis and the Gamma in the Netherlands. So basically we have all these different kind of companies in the EU that are not really expanding cross borders. So I think that's if economies of scale, so that also hurts productivity. But if we look at only this problem into, okay, these really high-tech firms, these firms that you could also call them undergoing disruptive kinds of innovations. So you could also look at this problem like you have incremental innovation and disruptive innovation. Incremental innovation is, for example, what the car companies are doing in the EU, optimizing your production process to get the costs down or to get more power out of your internal combustion engine. This is important. This also drives productivity. But to be the technology leader, you're not going to need to keep optimizing your internal combustion engine. You have to invent a battery car, an EV. Right. So that's so you can also look at this problem this way. So and then you see, okay, the EU is not doing great on this as well. Right. So I'm talking to you with a Chinese lab. Sorry?
Like we don't have a Tesla, right?
We don't have a Tesla. Exactly. So these companies didn't invest enough in this.
Whereas we do have the talent clearly for that.
Exactly. So I'm saying this because of and then, okay, we can look at the internal market. And then I'm saying, okay, if you look at these disruptive kinds of innovations, those are mostly happening now at startups, and those are happening mostly through software, right? AI. And I'm saying that, okay, these kinds of innovation, these kinds of products are not really affected by the fragmentation of the internal market. We are using ChatGPT, and it's based in the US. So it's really easily to export these kinds of products across borders. So I think it's really important to get to harmonize the internal market. But I think if we're looking at these deep tech kind of products, it's not a really important factor because it's just, I'm also using Spotify in Sweden, and it doesn't really affect It's not being affected by, okay, how are the regulations in the Netherlands and in Sweden? It's just a piece of software I'm using on my laptop. So I'm not saying that's why I'm saying that for this, looking
Mhm.
away at the problem is not really important.
But okay, maybe we can walk through a couple of examples because I'm a little bit skeptical about this point in particular. For example, if we look at Netflix and we take the example of the Dutch market, we have a very similar story. It's called Videoland, and I think they started as a video rental company, just like Netflix did, and then they have an app now, a streaming app. But the thing is, I think with a lot of those companies, you have this effect or phenomenon known as blitz scaling, meaning that it's like a winner takes all market. So you have to really like invest very rapidly to destroy the competition, ultra low prices, and raise your prices later when you've become this monopolist. But I think, for example, with Videoland, you see that, which is the Netflix of the Netherlands, essentially. The content's very important for them. And your home market effect, I still think I can imagine that it does still make a difference because you have these Dutch shows and you have to convince them to produce for you. And so for those kind of things, even though it's theoretically possible to call them up or something, it's much easier to go to their office and then to convince them to do it rather than someone in a foreign country where you don't know the tastes, you don't know the market. So I can imagine that's the Netflix example, that Netflix could never have come out of the Netherlands due to the language barrier because it is there, but just doesn't win the scale up battle.
No, I agree. I think so. Yeah, you're definitely right. So I think there are exceptions, and I think, um, but if you look at AI, for example, I think it's harder to make that case, and also for maybe for Spotify, it's we cannot explain all the differences between the EU and the US because it's the internal market is the problem here. I think something else is going on as well. So I think we should not only focus on this problem.
Yeah. Okay. Fair enough. So, Jasper, just to conclude, and I think we've already established that given that there are not that many unicorns, there's not that much data, so it's not necessarily uh, a done deal, like a conclusive discussion. But I think you did present some very interesting evidence that a lack of VC funding might not actually be the problem. It might actually be that there are other factors like being very difficult to fire people and therefore to fail in Europe for scale-ups and big companies. And that there's this big agglomeration effect essentially in Silicon Valley where that's attracting the talent away from Europe, potentially more likely than a lack of VC funding. And if we can figure out how to fix those issues, the VC funding will come because it's international anyway. Does that sum up the argument
Yes.
nicely? All right, great. Thank you so much for joining, Jasper.